We have contracts. Unlike our peers, we're uniquely positioned with sales contracts. Others might suggest that we couldn't get them, but we have them. I think the evidence is to the contrary. We're a legitimate U.S. producer.
If I got to ask you, so how do you think that makes shareholders feel? You know, that the company was going down a path which you've walked in a matter of months have said, this is never going to work. Why should investors trust this change? You thought you had it right before. Why is it definitely right now? Hello and welcome to Crux Investor. First of all, thank you so much for watching this video. If you like it, give us a thumbs up. And if I could ask that you do leave comments below, it just helps us understand what you guys are into and what you're thinking. And we will try and get back to absolutely everyone. And for those of you who have not already done so, please click the button in the corner of the screen to subscribe to our YouTube channel. And of course, for more videos like this, click the notification bell. We speak today to Wayne Helly, who is the CEO of Peninsula Energy. They're an ASX junior, but their main flagship asset, the Lance project, is in Wyoming, US. We've talked through a number of different topics, including a change of strategy recently and why they've done that. In fact, why they didn't do it sooner. They've also looked at their debt with RFC and come up with a way of dealing with that. They've raised a couple of $1 million. We talk about what that's actually going to enable them to do. Clearly, they do have some contracts and some revenues coming in, and they've entered the year with some cash, which should see them through to the end of this year. Now, we talked to Wayne about a variety of the macro factors, being the Nuclear Fuel Working Group and also the 232 petition, and he explains his views and his takes on that. And of course, this week's big topic, which is Cameco's announcement to stand their workforce down and what the implications of that are and possibly reasons why they did it. Take a look in the description below. If any of those topics interest you, click on that timestamp and that'll take you to that part of the video. In the meantime, let's hear what Wayne had to say. Hello, Wayne. How are you, sir?
Great, thank you.
Where are you calling from?
I'm in Wyoming in the United States. It's my home base.
The home base, you're a Wyoming boy, but we're going to get into that in a second. But Wayne, kick off, give us that 1 minute overview for everyone new to the story and we'll pick it up from there.
Sure. Well, we're talking about Peninsula Energy today. Peninsula is an ASX-listed, U.S.-based company. We have our projects here in Wyoming, and Peninsula took the Lance project from conception to production, which is an unusual characteristic for a junior mining company. We started our mining efforts in late 2015, and by the middle of 2016, it was becoming pretty clear to management that the operations results weren't, they were disappointing. Peninsula dug in and became more technical, and by early 2017, that led to a leadership change in the company. I was appointed as the CEO and managing director about 3 years ago in early 2017. We undertook some reviews, technical reviews, and came to the conclusion that the project would be better served with a low pH chemistry rather than the traditional U.S. chemistry, which was alkaline. Since then, we've done all of the regulatory and permitting work to allow us to become the first and only U.S. in situ recovery uranium project to be permitted to use the low pH technology. We think that'll give us a competitive advantage when we resume production. Peninsula, like all other U.S. producers at the moment, has our project idled.
Okay, yeah. Okay, well, thanks for that summary, first of all. Can we just talk about your background? Now, you're a Wyoming guy. You've been there many years, okay? So you're employee number one at UR Energy. You, I think Lost Creek was your little baby. I think I've heard you describe it as. And then after that, Christensen, Irigaray, etc. So you know that part of the world extremely well. So give us a bit more about you, first of all. Then I want to talk about the plan.
Right. Well, a long time ago, over 30 years ago, I started my career in uranium mining. I came out of college with a metallurgical engineering degree and mineral processing emphasis, and went down to South Texas at one of the last operating conventional uranium mills. Spent several years working at the mill as a mill metallurgist, and then began to explore in situ recovery, as it was really a growing and lower cost form of uranium production in the United States. After about 10 years in Texas, I moved up to Wyoming and was involved with Kojima, Areva, with the Christensen Ranch project. I was project manager there at that time. And right around 2004, I left. I was frustrated with the prolonged low cycle in uranium markets. It was 16 years into my career, and I never saw a good day of uranium markets in my entire life. So I explored an entrepreneurial opportunity and started a small business with a partner in Casper, Wyoming. But the phone started ringing in 2004. Uranium bulls were surfacing, and it was clear that I had some technical knowledges. So I wasn't divorced or separated from uranium, but for maybe 6 months as I started building a business of my own. Headed into consulting, and ultimately the uranium renaissance period occurred. I was drawn back into uranium and started for Ur-Energy in 2007. Wyoming employee number one, if you will. The mission for Ur-Energy was to take their properties and permit them, design a mine around them, and build a team that could do the entire prospect of taking a project from conception to production. I was happy to stay with Ur-Energy throughout that opportunity, and ultimately was appointed CEO at Ur-Energy for the work we did. 2015 stepped aside and went back to consulting. Still good opportunities. Those consulting opportunities led to my having an opportunity to work for Peninsula Energy. I took a look at their project in a unique way, and that ultimately led to my appointment. So yeah, 30 plus years in uranium. Not a lot of guys doing that.
And 30 plus years in Wyoming as well. Okay, so you I think it's safe to say you know the area. You've been working in uranium, and you've got projects from conception through to production. We look for that in management teams. So I'm just interested that you're able to, I guess, tick that box off for us. Now, you've taken over from Gus Simpson, who is someone I met back in 2011, because I think we had papered up a deal for him and he was on his way, literally midair. I think we were offering him $80 million of a convertible note, but while he was in the air, Fukushima happened. So I think it was the last of our conversations with Peninsula Energy. So I remember it fondly, fondly.
I have the utmost respect for Gus, a terrific entrepreneur. The man built this business. He, with his own grit and determination, made a lot of good decisions.
Some great stories, especially his attitude to conferences. Are legendary, but that we'll speak of that another time. But you've walked in to a scenario where you've taken over from someone who's been there a long time, and this is the serious bit: is you've had to change things up, and you have. You've come in with a different approach. So, what did you walk into, and why did you feel you needed to make those changes?
Well, the project, has great merits. It has a terrific resource and reserve. It's located in Wyoming's Powder River Basin, where it's a great jurisdiction. Wyoming's a good regulatory environment, but it just simply wasn't performing as expected. Peninsula used the standard operating techniques and standard operating chemistries, if you will, of the Wyoming type uranium deposits, but just simply wasn't getting the right results. My background in metallurgical engineering and process chemistry was the asset that I drew on. And we looked at the mineralogy and did a deep dive into the project, and came to the conclusion that it needed to have a different process chemistry to succeed. Now, fortunately, that process chemistry isn't novel. it's what half of the world's production comes from. When you look at ISR around the world,
But
Kazakhstan.
if I got to ask you, so how do you think that makes shareholders feel? That the company was going down a path which you've walked in and in a matter of months have said this is never going to work, or it's not going to work at the levels we need it to work. So, what was the work that you did to identify that need for change? That interests me.
Yeah, well, we really did do a deep dive into the mineralogy of the project. We took back and went to microscopes and said, is this what we thought it was? And we did find some subtle differences, some ideas that this wasn't the same mineral, host mineral predominantly that was the expectation. So it was unfortunate that at the time that the project was developed, low pH ISR in the United States was really thought to be unattainable. It was something that most people said, really, can you do it? And the project team that I'm working with had the vision, had the mindset that, yes, there's no reason why we can't, and we should. Let's do this because it will succeed.
Well, explain that to me, because there was a press release that came out on the 10th of March. Okay, so you're saying this is a big deal. Now, the trouble with press releases, especially when companies write them within a regulated environment, they're hard to interpret. They're hard to work out whether they're a catalyst moment or there's any validity to it, and they're just too darn technical for our audience, which is retail, family office, and high net worth. So, why are you saying that this is a step change for the business?
Well, it's really a step change for the U.S. industry. A couple of years ago, if you'd have said, I want to do low pH ISR in the United States, people would have said, well, you're really
what is it?
Crazy.
Tell us what it is first, for us non-technicals.
Rather than using the alkaline chemistry, which is oxygen and bicarbonate, as your chemical agents for injecting into the groundwater, those oxygen and bicarbonate are very benign. And people can embrace the concept of putting those into your groundwater to recover a mineral. But when you speak of low pH, generally you're using a sulfuric acid or an acidic agent, and socially it's a little harder to embrace. So in the United States, throughout my career, we always talked about the benign nature of the alkaline chemistry that we employed, and it really took some vision, some thought process to say, look, the world's industry, Kazakhstan, Australia, Uzbekistan, Russia, China, wherever they're producing by in situ, they've embraced the low pH chemistry, and quite frankly, they're doing quite well with it. Why shouldn't we? Why shouldn't we in the United States as a developed nation take on that chemistry and embrace it and have better economics and better performance?
Right. So in the past, the company has said that ISR alkaline would work. Did it?
That was the reason for the investigations in 2017. The company was disappointed because the alkaline chemistry really wasn't producing at the levels that. Right. My conclusion in looking at the management team and the folks at Peninsula was they're doing everything right. Okay. They're doing everything the way everybody else did. There must be a difference, and the difference was in the mineralogy, and that mineralogy is more amenable to the low pH chemistry.
But the decision making is by the team, right? The mineralogy has always been the mineralogy, okay? That hasn't changed. The decision making is the thing that has changed. So I guess what I'd like your help in understanding is, why should investors trust this change of process? Why have you got it right now, whereas you thought you had it right before? Why is it definitely right now, or righter, as some people would say?
Look, we've taken the idea to the laboratory. We've taken the idea to the field. We've demonstrated with the field and the laboratory work that this is a successful chemistry with this mineralogy.
Okay.
We've gone the extra mile. And it's a very interesting point you bring. Regulating an in situ recovery mine in the United States, I have experience with that, or getting it permitted. It took as much time to get a full commercial license as it takes to get a field trial license. So everybody kind of bypassed that step in the rush to production. Uh, Once we had this license and we were operating, although not as successful as we wished, we realized that we could do field trials with our license. We didn't have the big licensing step, so we did what hasn't been done for many, many, many years in the United States, and that was we put a field trial to work on our site.
Okay. And what's that going to cost you? Is this process more economic, or when will you know or be able to put some economics around this? Because clearly you're saying it's a better solution, but is it ultimately going to make you more money?
Well, fortunately, low pH ISR is not new to the world, and the supplies and the technology are very much like the in situ recovery using alkaline. So we've already put the pen to paper. We've done a feasibility study, which was authored and issued in 2018. We looked at some assumptions then, which preceded our field leach trial. Subsequent to the feasibility study, we did the field leach trial, and we confirmed a lot of those assumptions with that trial. So we already have the numbers. The pen has been put to paper, and the economic basis for low pH is available.
Okay. So with some peer analysis and looking around the market, you get a sense of what it's going to cost, but you've still got to go through a process yourself to confirm that, right?
It is, yeah. We haven't brought the project to commercial production. We believe that additional test work would be beneficial. The initial area that we tested in the field was an area that had previously been mined by alkaline, and we did significantly improve the uranium grade and recovery from that area. We now want to go to a fresh area, somewhere where we haven't previously mined, and do a field trial and get a full recovery curve from the beginning to the end. That should support our current assumptions, but it's we have the time right now to do a field trial. It isn't that expensive, probably $500,000 at this stage to conduct a field trial for the next year or so.
Right. Okay. So I think we're getting into an area where we're gonna start talking about some money, and we're bouncing around because there's a few ways to look at this. Obviously, you've made some cuts. You've reduced your overhead, your G&A. You've had to let some people go. I don't think that's particularly unique to Uranium Juniors at the moment. It's a tough place, which again we'll talk about. So, what did that involve? What sort of cuts have you been making? Across.
Well, unfortunately for our corporate office in Perth, Australia, it meant really reducing the office and going to, retaining our CFO there, but going to contracted services for corporate secretary and some of the administrative functions. That change is being implemented today, and we wish those long-serving employees very well in the future. We've also been able to, retain our key personnel at the mine site, but bring them to reduced hours and reduced salaries to control our costs while we're in an idle condition. And this is a different approach to what many are doing. Many folks are just simply letting some of their technical and key people go. Ours have agreed to stay on at a reduced rate and continue to work for the company and come back when the time is right. So I'm real pleased to be able to keep the team at the site intact as best as possible.
Okay. Yeah, it's always a tough time, and like you're right, your thoughts have got to go with the people that it's affected. But if you don't do those things, the company's not going to be around for very long. I think you can have some very unhappy shareholders. So do not envy CEOs during this period. I've been there and done it myself all too many times, so it's unfortunate. You have raised some money recently. Not a lot of money, but enough to see you through till when?
Right. Matt, our current burn rate now is adjusted down to be about $500,000 a month. We came into this year around $5.5 million. We have some revenues. We'll have some additional expenses, but all in all, we could see carrying this company forward with our current treasury to late this year to the end of the year, and that gives us a lot of time for some catalysts in the market, some changes. But it's clear without production and without sales, you are reliant on the market to help you sustain your future. We think we're doing the right things and that the market should support a project like ours. But I think the answer to your question right now is we see clear to the end of the year.
Okay, so December or fourth
Yeah,
quarter?
that time frame, you bet.
That kind of time frame. I guess you can, to some degree, you can manage that. What is this income that you talk about? You say, have you got some inventory, or how does that
Well,
work?
no, we have contracts. Unlike our peers, we're uniquely positioned with sales contracts. We've just completed a sale to one of our customers this quarter,
Hmm.
and revenue from the sales. We have additional sales later this year, which will bring in additional revenue. So we're not wholly reliant on the markets. We have assets that are unusual in the junior mining sector today, and that is some long-term sales contracts.
Okay, well, so tell us about those. Obviously, you're talking about the arbitrage between buying and spot in the market and whatever those contract values are. So what do you think your net sales are going to be on this year's contracts? What's the contribution?
We're probably bringing in $4 to $5 million net this year on the contract. So again, I wish it was enough to sustain the company on its own. We're doing everything we can to keep our burn rate as low as possible,
Yeah.
and we talked about that already. We'll do what it takes if the uranium market doesn't turn for us. But we have continuing sales until the year 2030 in our contract portfolio right now. Really, really, yeah, really. Nobody else can talk about that.
No,
That
can you give me a sense of what that means? 2030, that's amazing, right? First of all, but what sort of
Sure.
quantum are we talking at? Three, $4, $5 million a year for that time frame?
No, no. I mean, we talked about net in that
Yeah.
$4 or $5 million. We're going to move to a point where we have 400, 500,000 pounds per year of committed sales. The prices are in the low 50s, $51 to $53 a pound over time. It's a great building block for the project. But I can't say that we'd love to just stay with that. We want to see commitments for sales in the $50 price range, but 1 million or 2 million pounds per year, not just 400,000. I mean, that's your building block. That's your stable beginning contracting level. So
Okay.
we want to be a producer of 1 million or 2 million pounds a year.
Okay, so your margin on those contracts is going to depend on when you're going to be able to get into production, what your costs are for production, and in the meantime, if that doesn't happen anytime soon, you're in the market that's working out that arbitrage. Okay.
That's right.
I appreciate
The arbitrage works. We can work on the difference between the spot price and the contract price for a period of time, but ultimately we're committed to becoming a producer and producing those pounds.
Okay, and you've recently reduced some debt, but you've done that by issuing shares to RCF, Resource Capital Fund.
Right.
So that's a kind of paper exercise. Were you under some pressure from them, or were they looking at you going, this
No,
is
actually,
never gonna be cheaper?
at the time that we did the issue, RCF wasn't in a position to contribute cash and maintain their position in the company. But they had an interest in continuing to support us. So really what we did with RCF was brought their shareholdings back up to the level they were pre the issue, by issuing them shares and reducing debt rather than taking cash.
Okay, and you did that at 16.5 cents, which obviously today looks like a good deal, but they're hoping at some point will sort itself out. Okay, interesting. And so they continue to be a supporter. Who else have you got in there? What are the other big names that we'd recognize?
Yeah, I think we have a number of them who haven't. Your standard basket of strong uranium funds are in our story. I think you can be assured that They haven't all elected to, be named, and so we're cautious of that. But Paradise is a good supporter. They own about 10% of our shares. Resource Capital Funds we talked about. Collins Street Fund is a Melbourne-based fund who's a value fund, and they've put a good share in. But when you look around at our share registry, we do have good representation throughout the space from the usual suspects, if you will.
Yeah, no, for sure. I mean, given it's a Australian company with US assets, you're based in Wyoming, you've reduced the Australian office. Is there any impending change of exchange for you? Is that a concern? Do you think you'll get a bit of a hearing if you can get onto the US listing?
I think our peers who have U.S. listings are enjoying a premium over what we do. For like projects and like value, their valuations seem to be a little better. We do have a view that a U.S. listing would be a good thing for the company. It's not that we view that we'd like to change from Australia to the U.S., but having a secondary listing and having better access for U.S. shareholders is important to us. The challenge right now is our market cap, and getting a listing with this market cap is frankly not doable.
It's pretty tough. I think today it's about 30 million. I'm guessing Australian, which is that runs about the same. $20 million runs the same as the Canadian side of things. Okay, so let's talk about. No, thanks for that. Let's talk about the market, right? Okay, so your shares, like everyone else, fell off the cliff around 232. As a U.S. producer, I do want to talk about the nuclear fuel, the nuclear fuel working group, because I wondered, being an Australian company but with a U.S. asset, do you feel or consider yourself part of the U.S. story? Are you expecting to be able to get contracts once this gets resolved, or are you still an outsider?
We're far from an outsider. Our contract book is with, involves U.S. and European utilities. We have contracts with U.S. utilities. Others might suggest that we couldn't get them, but we have them. I think the evidence is to the contrary. We're a legitimate U.S. producer. We have the ability to ramp up our production with a low capital cost. And we are a U.S. domestic producer. Despite our ASX listing, if you're going to look at the Nuclear Fuel Working Group and qualifications to perhaps get a piece of the contracting with the U.S. government, we certainly qualify, and we certainly would be in the running to offer competitive prices to the U.S. government for our production.
Did you get involved with the 232 discussions, the petition?
We did not. We weren't supporters of the petition.
Okay.
We were not.
You're not. You weren't supporters. Why? What did you foresee? Did you foresee what was going to happen, or do you think it was a pointless exercise?
Hey, Matt, there's quite a few reasons why we weren't supporters. Initially, it was that we weren't invited to the table.
Oh, you're huffing. We're having a huff. No, but tell me what were your thoughts around that time? Because it was a tough time. There were a lot of people who said that this is utter rubbish. It's not a security issue. It's self-interest at heart. Okay, and then there's the other side which we're going, this is genuinely a national security issue. Those Kazakhs, those Russians are taking over in our industry. We no longer have a seat at the table. And we have a problem with that. So were you somewhere in the middle, or were you one of those?
I was somewhere in the middle. Thank you for asking. I think, to start out with, I think there is a genuine U.S. national security interest, and that footing is fair. Our government is required to purchase domestically produced uranium for its national defense purposes. And if there is no domestically produced uranium, our government has no access to uranium domestically produced, period. So there is a legitimate national security interest. The problem that we had is in the responsibilities. Where's the responsibility lie for ensuring that the U.S. Domestic producers are viable. And the petition really asked the U.S. utilities to be the responsible party. I think it's the U.S. government that needs to be the party that steps up and holds up the industry, which is, uranium's a critical mineral. We need it for our national defense. We need it. It's beneficial for our utilities to be able to utilize domestically produced uranium. We certainly know what supply disruptions about these days with the coronavirus going around. I mean, everybody knows how important it is to have a reliable supply source, and a diverse supply source, including U.S. domestic production, should be a valuable component for the nuclear utilities. But to compel them to be purchasing uranium by government mandate from us didn't sit right.
Didn't sit right, meaning you think the market should have worked that out itself, or you thought it was a pointless exercise because you're stepping into the world of politics? Because that's certainly what seems to have been happening since. It's taking a long time to respond. The 90-day came and went. We had extensions, and now we've got this nuclear fuel working group who seem equally incapable of making clear announcements to the market, because just before the market reset and the corona epidemic or pandemic that we're all suffering from now, the US government were far from clear. The announcements from the two energy secretaries confused the marketplace. I mean, is that what you saw coming down the line? Is that a problem that you saw, or it didn't surprise you in any way?
We've evolved in our participation once 232 was in the rearview mirror, and the notion of compelling the U.S. utilities to purchase a portion of their demand from domestic producers was behind us. And we could see the light with the U.S. government funding or possibly purchasing directly from the suppliers. We became more fully engaged with the Nuclear Fuel Working Group. Peninsula's been involved and supportive of the Nuclear Fuel Working Group efforts, and the president's line item for purchasing directly from us for stockpile needs or other needs, we support that. We think that's a good measure. I think a viable industry in the United States is more than two companies. I think a viable industry really, can be defined by probably 5 or more companies. So we need to make sure that we look at what's viable, and that's the voice that Peninsula has brought to the table is, two companies does not make a viable industry.
But what are you in support of? You said you're in support of the U.S. government statement. What do you think they have said?
Well, the Trump administration, and I think this is a product of the Nuclear Fuel Working Group, the Trump administration has put into their budget the notion of purchasing directly with $150 million a year over 10 years. I like that. I think that's a very good start for the industry. Again, with Peninsula having a base load of contracts, if we can do a little business with the U.S. government at a fair price, that really puts our project on sound footing.
Okay, but tell me again, just precisely, because I've not heard anything. It's like, at what price are they going to be purchasing? Who's getting the contracts? Who's getting how much of those contracts? I say there's more than 2 horses at the race. I think Jeff Klanda, he thought there might be 4. I think Mark Chalmers has said, maybe I think he's focused on the 2 horses at the race, as his shareholders would want him to say. But how do you break that down? Because again, it just seemed very vague to me, and I'm not sure I know where the money's going or indeed where it's coming from. It just ain't number.
It's clearly not defined. It's a budget line item, and it's the first time that it's in the budget. And the Department of Commerce, who may be responsible for doing the buying, has said, if the budget is approved, then we will move forward with defining the purchasing process, the purchasing price, who's who's selected as bidders or who's qualified as bidders. So unfortunately,
when
we're a little bit race.
We've got to tell us when, because again, the conversations, people are looking at the state of US politics at the moment. Obviously, we've got this COVID-19 coronavirus, which is affecting everyone globally. And, nice to see everyone coming together on that one. But people are expecting an announcement prior to that. It didn't come. I think you've got US elections coming up.
Right.
You've got a whole bunch of political events happening which are going to get in the way of decision making, because sometimes these hard decisions don't win votes. So they get delayed and delayed and delayed. But a lot of junior companies, and put you in there, are suffering because you're having to string out your budget to the point at which some kind of clue is given to the market. And these very smart utility buyers, these are smart guys, are going to then make their decisions. And that may not work to your timeline. So what's your view of when these decisions get made, when the market gets some idea?
With respect to the budget, I think the process does get drawn out until after the elections. I agree with that assessment. It's not immediate relief, and anybody who thinks that $150 million is going to be some form of immediate relief this year is going to be disappointed. There are other opportunities to provide relief to the industry, and the president has shown his willingness to sidestep the budget process in many of his initiatives. If and when things settle down on the virus front and the economy starts to settle back down to normal, I'd hope that it gets some attention again. But my feeling is that the survival of the domestic uranium industry as a whole is not a narrative that has great purchase in the United States. It's not something that has a strong political will behind it. The people who are sensible about the defense needs for uranium are going to strongly argue that we need to take steps to keep the industry alive. But the public doesn't necessarily embrace this as priority number one, and we have to realize that we're second in the queue right now to all the other economic initiatives that the government needs to take to keep our economy afloat.
Yeah, it kind of interests me that there's, obviously most countries are doing quantitative easing with trillions and billions of dollars. It seemed like if they were minded to last year, they could have done something about it. But I guess they were waiting for the utilities to drive a decision. So again,
nobody should be. Hold on. Nobody should be arguing that the utilities in the United States haven't in the past or don't currently support the U.S. domestic mining industry. I have current contracts with utilities in the United States, and we greatly appreciate them. Back after the uranium renaissance, I was involved in seeing a handful of U.S. utilities signing with prospective producers. I was engaged with one of those prospective producers. We got great support from the U.S. utilities at a time when we were all just, a prospect. They have a piece of their portfolio that they can reserve for higher risk supply. And the U.S. utilities, many of the U.S. utilities were stepping up and supporting the new uranium producers in the United States. A number of us came out of the uranium renaissance period with a fully developed project, a small number. And I think virtually every one of them that wanted to had the support of the utilities with contracts. You shouldn't make the assumption that the U.S. utilities don't want to do business with us. It's just that today they are able to purchase lower priced uranium from other supply sources, and the buyers do have a responsibility to select sensibly.
Wayne, you've got to say that, haven't you?
I'm sorry?
You've got to say that, haven't you? You've got to be nice to the utility guys, but the truth is they're holding the market to ransom.
Explain that, Matt.
Well, I'm just saying, the utilities right now are getting in the market, getting the blame for being selective with where they buy. They don't really care about the U.S. Uranium sector because they can go elsewhere and get that. They can go and buy from the Kazakhs. They could care less. They don't see this as a security issue in the way that some people are arguing. They're buying
you're right.
The cheapest product going. But so how is that supportive of a U.S. infrastructure for uranium and nuclear in the U.S.?
Well, yeah, obviously, there's a gap between what the U.S. producers are willing and able to supply uranium at, and what the foreign producers are willing and able to sell uranium at, and that gap needs to be bridged. It's difficult for a fuel buyer to justify paying a high premium for domestic production. I appreciate that. It's incumbent on us as domestic producers to find a way to lower our unit costs. That's what Peninsula has really been all about. Our transition from alkaline chemistry to low pH chemistry, which is the lowest, the world's best way to produce uranium, is all about driving lower unit costs and putting us in a highly competitive position in the market so that we can bid into contracts at better prices than our peers.
Okay, so do you think the demand side of the equation is more at risk because of that attitude, or do you think the supply side is at risk because of that attitude?
I do think that we have to be careful on the demand side that we don't become overly reliant on other sources. I think that there is a recognition amongst the fuel buyers that diversity of supply is a good thing. The challenge for them is to justify the cost of that diversity.
But those U.S. utility guys were not backing the 232 petition. They've got other options. They've got natural gas, they've got renewables, etc. Right? They don't have to. It didn't make economic sense for them. So that's what I'm saying. If you go, made in the U.S. and supporting the U.S. but not necessarily on our dime, it just doesn't seem incongruous to the sorts of stories I'm hearing about national security being so important to the U.S. If it's that important, fix it. You got the money.
A regulated utility in the United States has to make a rate case in front of a commission. Their rate case is that they did their best at buying. They purchased material at the best market price, and the commission has to agree with that. If the U.S. domestic producers don't offer the best price to the regulated utilities, how do you make, how much of a premium will a regulatory commission give you for purchasing? It's striking a balance. It's a challenge, and I really believe it's incumbent on the producers to get their projects to come to the market rather than force the market to come to the producer's price.
Yeah, strange market indeed. Do you see yourself as fundable in the future, or are you more likely to be taken out as an M&A target?
I think we're fundable. We don't have a huge capital need to return to production.
What's the number?
Development projects. To put our existing well fields, which still have over 1 million pounds of resource available in them, back into production, we're only talking about $5 million.
Okay, that's good. Is that right? I didn't appreciate that.
And once we get that going, we'll probably need to raise a little bit more money to expand our well fields. Because the cash flow is not immediate when you put fields back into production, and we'll want to get new well fields built. Typically, a new well field with 1 million pounds will cost us around $10 million. We're a company that really doesn't have a huge capital need. We have existing infrastructure. We have the plants. We have the ability to produce uranium. We have the employees. We're we're situated quite well to move quickly to respond to an improving market and to put our projects back into production. So are we fundable? I really think so.
Okay.
I probably wouldn't be here if I didn't believe in Peninsula and its projects.
Okay, and you've got a £3 million license as well. Where do you? Tell me about ISR, the new setup. Obviously, in situ, that's different from conventional. What happens? Where does it go when you have done what you need to do with it? Is there another link in the chain which kind of affects your ability to define or control margin?
Today Peninsula has and sensibly built what is typically referred to as a satellite plant. We load resins with uranium, and then we rely on another company to extract the uranium from the resins and produce the yellow cake. In the future, it's very sensible as we gear up our production that we bring that in-house. That's something I've done in the past. We built the full plant at Ur-Energy. We, very comfortable with what it takes to do that. Yeah. But for capital purposes, Peninsula started up with a satellite plant. But we have, the facilities in our neighborhood. So we're relying on a neighboring company to do some toll processing for us, and then that product is the end product from our neighboring facility is the same as yellow cake from anywhere in the world.
Okay. Can I finish off on just one more macro question? The big one of this past couple of days, Cameco just made the announcement to ask their staff to stay away from site for the next 4 weeks, I think it is, and may extend that depending on what's going on under the guise of COVID-19. Do you think that is the case, or is this just a chess move on their behalf to push spot market?
I think it's absolutely the case. When you have a remote mining operation and you have to transport your employees en masse from one site, from home to the site, and they stay at the site for a period of time. Imagine being an employee who falls ill at the site. Imagine if Cameco had 5 or 6 employees that needed to be transported back to hospital care from their site. I think the risks are enormous with a remote mining site, and I think it is a very sensible step that they're taking to protect their employees. That said, I also am going to run against the grain here, and I suggest that their shutdown will be of a minimum duration that they can do. A month of production is 1.5 million pounds from Cigar Lake. So the 4 weeks shouldn't really dent the market. But remember 2006, Cigar Lake flooded. You remember, that anytime there was a supply disruption from Cigar Lake, that boded very well for the uranium markets or the price of uranium. But Cigar Lake is a unique mine. They have to continue to freeze the ground in order to keep the water out of the mine.
Yeah.
How long is Cameco going to be willing to incur the expenses of freezing the mine? Do you think they really want to endure a long shutdown? I'm going to say no. I'm just going to say it's expensive to keep that mine in care and maintenance. It's in production because it needs to be. It has the forward momentum, and I believe they'll be back in production as soon as they can justify it.
So you think that's a genuine move, genuine concern, not headline grabbing, nothing to do with trying to affect the spot price in the marketplace?
It certainly grabs the headlines, and I contemplated will it affect the spot price? So the first analysis is, was Cameco a spot market supplier?
Yeah.
No. So we haven't changed the supply for the spot market. Right? We haven't changed the supply. The second question is, well, then, if Cameco is not a spot market supplier, are they a spot market consumer? And the answer is yes. But do they have to buy immediately because they shut down the mine for 4 weeks? Probably not. They'll look at their contract books and they'll see what they can do. they're entitled to half of that production. The other half goes to Orano and a few others. You know, all told, Cameco's share of 4 weeks of production is 500,000, 600,000 pounds. Can the spot market supply manage another 600,000 pounds? I'm going to say yes. So I think the spot market is going to have an emotional response to Cigar Lake shutting down, because Cigar Lake shutting down is a traumatic event in the life and history of uranium. It has scars associated with it. Cigar Lake is the biggest mine in the world, and it does grab headlines when it's shut down. But I think that Cameco is being sensible and protecting their employees, and I don't think that they're motivated to maintain a long-term shutdown. I may be proven wrong, but that's my take.
We shall see. We shall see. Wayne, that was fantastic. We've not spoken before. I really enjoyed that, and thank you for being so candid with us. Great little project. I like the fact that there's not too much more money required to get things going. Obviously, you, like everyone else, needs to get the market needs to come back. You need to get those prices there, and hopefully, you will be able to enjoy the fruits of your long-term contracts that you've got in place.
Closing, I think we have a competitive advantage. We're not talked about enough. We're kind of a forgotten company, and it's my job to get the word out, I guess, that we are a viable, legitimate producer. So
it is. So keep talking. Give us a call if you've got something to say, and obviously, best of luck with what you're doing there at the company.
Thank you. No, I appreciate your willingness to take on this interview, and wish you well with it. Your interviews and your audience are certainly, a mover in the uranium space right now. You've become a pretty important guy.
Well, thank you very much. They are a smart audience. They're very much more knowledgeable than me, and very, very passionate. So we do enjoy talking to people in the uranium space and helping them get access to information they can't otherwise. So thanks again, Wayne. We will speak to you again soon.
Thank you. Take care.